Hope everyone's doing well. My name is Sean McKay, and this is the 5 most important factors when picking your self-directed IRA or 401k company. And this is an American IRA presentation. So certainly the bulk of what we'll discuss today is the difference between the different self-directed IRA providers. And certainly as with really any business relationship, it is kind of a personal decision as to what fits you and your personality. But there are some kind of overriding concepts and themes that I think certainly we all think about, especially as it pertains to picking a financial services provider. And so ultimately, as we go through these concepts today, obviously this is my perspective as a team member at American IRA. However, definitely always feel free, and I think you should go out there into the marketplace, look at reviews, look at what clients are saying about their experience with whatever respective self-directed provider you're considering working with. So whether it's the Better Business Bureau, Google reviews, Yelp, whatever the platform may be, that's certainly a good place to start in terms of understanding, again, kind of the client relationship there. And so we're very appreciative of the significant amount of positive reviews that we enjoy on all these different platforms here. And so ultimately, these retirement accounts are such a significant part of our financial life because what we've seen historically is that in order to be able to retire, there's typically been about 4 legs to the table. There's pensions, social security, personal investments, and retirement accounts. And so, as many of you are aware, pension plans are really going away, if not already extinct. Social security looks like it's going to need a pretty significant overhaul. We have more people pulling from social security than we have people putting into that. And so that is certainly not a sustainable long-term model. And so really what that leaves us with is personal investments and our retirement accounts. And so personal investments are tremendous. However, they're not nearly as tax efficient for the most part as investments made with our IRAs and 401ks. And that's certainly where we're going to focus our discussion today. So when we define a self-directed retirement account, it's important to note a few aspects. So the first one is, as the name indicates, these are retirement accounts where you as the account holder get to pick the investments that make sense for your portfolio. The second concept revolves around the types of investments you can make with your retirement account. So there are a tremendous amount of quality equities providers. So if you want to buy stocks, bonds, mutual funds, and index funds, there are many options for you. However, if you want to invest in what we consider the alternative assets, such as real estate, private placements, debt instruments, there's really a much smaller world of companies to choose from for those types of investments. Also, please keep in mind that when you're thinking about your retirement account, really any type of IRA product can always be self-directed. So if you currently have a Roth, a traditional, a SEP, or a simple IRA, those can be moved from any of your current relationships to a firm such as ours for these alternative investments. If you have an old employer-sponsored plan, like a 401k, a 403b, or a thrift savings plan, you can move those. Again, typically it needs to be with a previous employer. So when you're no longer employed there, you can elect to move some portion of those funds over to a self-directed provider as well. And really the way the IRS code is written is it tells us what we cannot invest in with our IRAs and 401ks. And so essentially, as long as it is not collectibles or life insurance policies, you typically have the ability to invest in those assets. And so as you can see from this list, this is by no means a complete list, but some of the more typical investments we see from clients on a daily basis. So as we look at the real estate asset class, your retirement account can directly own any type of physical real estate. So whether it's raw land, condos, townhomes, single-family homes, commercial, industrial buildings, apartment complexes, you name it, your retirement account can own it. It can also be the bank, and it can lend money to other investors, usually securing those monies either by a deed of trust or a mortgage, depending upon the state that you invest in. We're also seeing a significant amount of investment into precious metals, such as gold and silver. So again, kind of sticking with that hard asset theme. So ultimately, there are a lot of options available with your self-directed accounts. So the first thing we want to touch on is the idea of knowledge of your self-directed team. Now, we're very, very fortunate in that we get a tremendous amount of business, certainly from our current clients referring their family and friends, but also from those that are just going out there into the marketplace and having a number of conversations. And the thing that we hear regularly is that as they're talking to some of these other providers, they can literally hear the pages turning as the rep, if you will, at that company is looking for the answers in the conversation with the client. And so we really pride ourselves on American IRA on having a deep understanding of the investments that our clients are making. We do a significant amount of training on a weekly basis, actually, with our team in-house. And so ultimately, we can speak from personal experience because a number of us have actually created seven-figure net worths. So I think that you're always going to have a different conversation with someone when it's not a theoretical understanding, but it's coming from a place of being an actual practitioner. So the second concept is the idea of LLCs and checkbook control. And so with that, what we're talking about is a retirement account that is a member of an LLC. And so ultimately, this allows the client to directly transact on behalf of the retirement account without having to go through their self-directed provider for the purchase or the sale of assets and the daily flow of monies. And so ultimately, what you find is that different companies have different perspectives. So some companies say that you must have this checkbook control concept, while others will say you're not allowed to have this checkbook control. So American IRA, we're very much a hybrid firm. And so it is by no means a mandatory concept to have the checkbook control. But if you deem it appropriate based upon your structure, the way that you're looking to maneuver the account, if your professionals deem it to be appropriate, then you can certainly move forward with that. But again, it's certainly not mandatory for our client base. And then the third concept is what I consider to be kind of the relationship part of your self-directed journey. And so ultimately, we do find that in our industry, there's a little bit of musical chairs with different team members, either on the sales end or the operations end. And so as a client, you might have a tremendous relationship with one or a few team members, but then if they're bouncing from firm to firm, that then raises the question, are you going to move with them from firm to firm? Or are you going to stick with your current provider and kind of recreate those relationships, if you will? We've been very fortunate at American IRA that with our senior team members, the vast majority of the supervisors have been with the firm for 8, 10 plus years. And so we are very, very lucky to have that kind of internal continuity, which I think is extremely helpful for our client experience. Now, the fourth concept isn't necessarily talked about quite as often, but it can be really important to the nuts and bolts of the retirement account relationship. And so this is the idea of whether your provider is what we would consider fully integrated or not. And so what you find in our industry is that there are many self-directed providers that are reliant on a completely separate third-party company in order to be in business. And so they are the administrator, and there is a trust company or a custodian that has a totally separate ownership group that they're reliant on to be the custodian for client assets. Now, that can be extremely precarious for that administrator because they're essentially on an island. And if anything ever happens, whether it's legislative or just the interest of that custodian to continue to hold alternative assets, they can give a very short window to that administrator to find a new home for the assets before they're terminating that relationship. And so ultimately at American IRA, we are fully integrated. We have the same ownership group for American IRA, which is the administrator that has the direct interface with clients, as well as the New Vision Trust Company, which is our parent trust company. It's the custodian. So again, the same ownership group for both of those firms. So we're not out there on that island. It also helps us from an education standpoint as we receive information from our trust company, we're able to relay that internally with our team members as well as to our clients as well, which I think is really helpful. And last but not least is the idea of fees. And so we completely appreciate that every consumer, every client, every customer of any product or service wants to feel as though they're getting a good deal and good value for their hard-earned money. And so typically what you see in the self-directed arena is that from an annual fee perspective, there's really one of two models traditionally. So the first one is an annual asset fee, where they're charging usually about $300 per year per asset that they hold for your retirement account. So if you have 3 assets, $900, 4 assets, $1,200, et cetera, et cetera. So clearly that can get very expensive very quickly. The second model is when they're looking at the size of the account balance and they're charging you more money each year as your account balance grows. And so again, this can become very expensive as you as the client are becoming successful in growing your retirement account. So at American IRA, we have a different perspective. Again, because we're just simply the record keeper for the retirement account, we're not advising you, we're not providing tax and legal service or financial guidance as to how to optimize your retirement account, nor is any other self-directed provider. We shouldn't get to see increasing upside in terms of the fees we can charge you just as your account balance grows. And so ultimately, again, our fee is kind of a straight line, and then the account value as it goes up, you can see just that margin growing wider and wider, where you're able to benefit from the growth in your account, not your self-directed provider. And so seen on a different screen, again, either account value or the number of assets, your annual fee will continue to grow. Versus with American IRA, for our IRA product, our baseline annual fee is $285 a year. I'm Sean McKay with American IRA. My email is Sean, SEAN, at AmericanIRA.com. Our website is AmericanIRA.com, and our local number is 704-633-8155.